Today, I want to discuss with you what for many people is the holy grail of financial freedom: making money while you sleep, otherwise known as passive income, liberating yourself from the day-to-day drudgery of your 9-to-5 job to allow yourself to pursue more fruitful endeavors with your life, or at least to have a bit more comfort and financial security. But this is not something that happens overnight. It takes planning, it takes diligence, and it takes dedication to do well. And yes, there are lots of ways to do this with cryptocurrencies. So this video will be exploring some of those different options that you have available to you to be able to make a passive income with your cryptocurrencies. Now, before we dive into that, if you haven't had a chance to check out SIMETRI yet, then I would definitely recommend going over and having a peek. They are producing the same kind of high quality, top tier reports that venture capital firms get before they make their investing decisions. And their reports can help give you the edge on your cryptocurrency investing. This month they have issued great reports on Theta, Pi, Enigma, and Grin. If you want to learn more, then check out my referral link down below. If you use it, I will receive a small commission from the guys over at SIMETRI, but at no additional cost to you. Okay, so one of the secrets of the world's wealthiest individuals is to automate the creation of wealth. That means making a passive income. Now, you can of course choose to exchange your time for money, but it's a bad trade in the long term because your time is incredibly valuable. Yes, your knowledge, your expertise, all that stuff has a monetary value, but the problem is that you only get paid once when you trade your time for money. When you get paid that one time, you have a decision about what you can do with that money. You can spend it once and it's gone, and then you need to work again to get more. Or you can invest it into something that will ensure that you keep getting paid again and again and again, basically putting your money to work for you. And if you invest that money with the right people, then you can actually receive substantial rewards for doing so. But choosing the right options is the trick. Now, as an example, currently savings accounts rates at banks are like 2% in many countries, which is absurd and barely accounts for inflation. Almost half of the world's sovereign bonds offer negative yields. Stocks, of course, are still attractive for many investors, but we are crypto investors here on the Crypto Lark channel, guys, so we're going to be talking about cryptos today. And there are loads of opportunities for getting a solid passive income using your cryptocurrencies. However, passive income is not as passive as it may sound. You still have to work for it, guys. You still need to research, you still need to commit, you still need to monitor those investments. Also, keep in mind that you need around a return of 7% a year to double your initial investment in around 10 years. So keep that number in mind for later on. Also, let me preface this entire conversation by saying that nothing is without risk. You will need to exercise your own due diligence to weigh up the risk and reward factor on anything that I discuss here to decide if any of those options are something that you think will actually provide some kind of benefit for you in the long term. And if your answer is no, then that's okay too, guys. Sometimes the best thing to do is to just buy and hold Bitcoin and not worry about any of the other stuff going on in the background. But if you are interested in some ways in which you can automate the money making process, then stay tuned. So the first thing I want to discuss is probably one of the most popular, which is staking coins. These are coins that you stake on the network and receive a reward for. Now, could be that only, for example, master nodes are eligible, meaning that you will have to commit a significant amount of money to participate to have a master node in that network. As an example, a Dash master node costs more than $100,000 today. The all-time high was $1.5 million, currently giving 6.3% APR paid out in Dash, a PIVX masternode that was only $5,000, actually less than $5,000 currently, and it was at $135,000 at one point with a 9.3% annual dividend. Now, aside from the substantial investment, of course, you'll actually need to be running a node to support the network, thus the masternode name, right? Now, if that is too expensive or too technical for you, then yes, there are some services which let you, for example, combine your coins with other people. So if you have only like 10 Dash, for example, then you can use a third-party service to stake and earn rewards for, of course, a small fee paid out to the operator. Then there are other coins like Ontology, which simply require you to keep your coins on your wallet, and they will deposit Ontology gas, which is a secondary asset, into your wallet account. Basically just deposit the coins and forget about it, and your gas piles up. Other cryptos, though, require you to keep your wallet online at all times in order to earn rewards. These kinds of staking coins have the advantages of low barriers to entry, unlike the Dash Masternode, for example. So with Ontology, the minimum stake, it's one Ontology, which is only around 90 cents today. But obviously, the more that you stake, the greater the reward you will accrue. And there are loads of options, guys. There's Tezos, there's IOST, there's Cosmos and Komodo and VeChain and Energy and Tomo Chain and Fusion and soon to be Icon and ADA and Ethereum. And if I didn't just say the name of your favorite coin, then relax. Because those names are just the tip of the iceberg, guys. There are a few hundred different options. Check out stakeandrewards.com to see a wide range of kind of the better options which are available and the rates that are offered with those coins. But of course, nothing is without risk. There are hundreds of options, which means that some of the staking coins are total garbage and are never going to be worth anything. It doesn't matter what percentage you're getting back. And investing, of course, in a masternode or a big bag for staking of one of these coins, while it may seem like a genius idea initially, pretty soon you can see the market dry up and you're basically left with a bunch of coins that have no liquidity and no value. But hey, 300% inflation rate, yeah! In this way, the coins with lower returns of around 6, 7, or 8% are probably more stable in the long term. The really high inflation coins can burn out very quickly. Keep that in mind. The inflation factor is real here, guys. Those massive returns of 70 or 80% annually may sound great, but that means that there is an annual inflation of 70 to 80%, which is massive. Now, for a new network, that might be normal. The reward will drop over time. But these really high rates of return often lead to very high sell pressure because people are getting lots of coins for free and then selling them. When investing in a staking coin, you really need to believe in the long-term prospects of that given cryptocurrency, which is in of itself a risky game considering how early we still are in the cryptocurrency markets. Investing in staking coins, while kind of easy on the face of it, still, of course, requires an understanding of the market dynamics underlying any given coin. And please keep in mind that not many coins are actually made in close coordination with switched on economists. They're just developers throwing out numbers sometimes. Also keep in mind that if you are not staking coins, but you have a coin with a high staking inflation or inflation at all, then every day the inflation mechanism is diluting your stash. So if you own one of these coins, then it is definitely in your best interest to actually be participating in that network, securing that network via staking and getting your reward. Also, many blockchains offer some form of governance rights if you are staking or if you are running a masternode, which of course is really an incentive yet again to participate in the community and in turn, of course, help make your investments succeed in the long run. Now, you must also keep in mind the security requirements too, as some forms of staking will actually increase your chances of being targeted by hackers. So please research. Please understand the risks associated with any particular coin that you're investing in. Next up is exchange coins. Coins like BitMax and KuCoin Shares and Nash and Biaxi and Cause. These are just a few, but really these are dividend tokens. Tokens that basically give the holders percentages based on the daily volume of the exchange. Some of these pay out in stable coins. Some of these pay out in small amounts of all cryptocurrencies that were exchanged on the platform, which is great because it means that you are not suffering from the inflation problem present in other staking alternatives. Now, as a few examples of what you can earn with some of these exchange coins, BitMax is currently paying out 32% APR in USDT. KuCoin is currently around 37%, with a big spike recently after the launch of Cumex. Nash is yet to launch, but it'll be paying 75% of exchange fees in all of the cryptos traded on the exchange, assuming that you dedicate those tokens to a 2-year lockup. How successful that will be, of course, depends on how much volume Nash is able to actually get on the exchange. Biaxi pays out 25% of exchange fees based on a 6-month lockup of tokens. It is a new exchange, though, so how much to be earned annually really remains to be seen at this point. Cause is currently offering around 17%, although that would increase if the volume can pick up on the exchange. As with all things, guys, the earlier you get in, the better your rewards are going to be, as you will acquire the coins before the market sees a higher value in them due to the given reward ratio and the annual payout. But you do assume more risk in that situation. And of course, exchange coins usually require you to keep the coins on the exchange. Not always, but usually, which again is a level of risk. And of course, it requires you to believe that the exchange will be able to continue to attract volume and to get new users onboarded, which is very important for the long-term health of the exchange and of course for your dividends. And of course not to be shut down by some authorities somewhere, because while the dividends are great, you do need to get that ROI back out of those in order to profit. And if your tokens suddenly lose all of their value because the SEC raids their office, then not only will you not get any more dividends, but your entire investment in that token could go up in smoke. The next topic is lending. And no, I am not talking about any of these BS scam sites that offer 5% per day. That's a scam. Or that offer to triple your money in a week. That's a scam. That is just someone else getting rich off of your hard-earned money. Don't fall for that stuff, guys. Realistic rates are usually under 10% a year. A year, not a week, not a day. Now, there are a lot of reputable options out there for those of you who want to choose this option. When you look around to lend your crypto, you have Nexo and you have Cred and BlockFi and Celsius and Crypto.com all offer very competitive rates ranging from 6 to 8% for lending out your Bitcoin, your Litecoin, your Ethereum, or your stable coins. Then, of course, there are margin lending services offered by exchanges such as Bitfinex, but these usually have lower rates compared to the lending services that I mentioned just a moment ago. For long-term crypto holders who are not planning to sell for like 10 years, these lending services can be incredibly attractive, as you can earn a steady percentage on your long-term holdings, potentially doubling your amount of Bitcoin over a 10-year period for not doing much more than just sitting on your hands and hodling. But of course, lending your crypto is not without risk, because of course it does require you to trust someone who is not you. You need to decide if the risk is actually going to be worth the reward. Often there is no insurance for the underlying assets with these platforms. Sometimes there is, to a limited degree. But in general, the highest security standards are maintained by these companies. Celsius, for example, uses BitGo custody, which is actually certified by the SEC. Also keep in mind that many of these companies, they're still very, very new, and some of them may not survive long term. You'll need to keep up to date with these companies, not just kind of set it and forget it for 10 years. Then, of course, finally, we have Bitcoin and cryptocurrency mining. Cryptocurrency mining can be super profitable. I remember when I first heard about Bitcoin, it was so crazy. The idea of a Bitcoin mining machine, I just thought, oh my God, someone has finally invented money printing machines for the average person, which is basically what a Bitcoin miner is. Now look guys, I'm not going to give you any specific numbers here because it can vary so widely depending on the coin that you're mining, the daily network conditions, and your hardware, and your power, etc., etc., etc. But there are a few things that always hold true in cryptocurrency mining. To be successful, you will need to personally own the hardware. You will need space to house the machines, like a garage, because miners are loud and hot. If you have a small apartment, this is probably not going to be for you. And of course, you need cheap electricity. The cheaper, the better. Bitmain and Canaan are the biggest suppliers of mining hardware globally right now for Bitcoin, and Nvidia and AMD are the top names for GPU miners. And to be clear, I am not talking about cloud mining here, of which the vast majority are scams. And the few companies that are not straight up scams, and there are a few, have incredibly thin profit margins, which can disappear basically at the drop of a hat as the network conditions can change drastically, and of course, they also offer terrible terms that completely unfairly advantage the company to an insane degree, and these companies have zero accountability to you, so it's an incredible gamble compared to other options. Now, Bitcoin, Litecoin, Ethereum, and other major cryptos, all of which have specific mining computers, operate in a world where things move fast and machines get outdated very, very quickly. And the network can change in a flash, vastly affecting your profits big time. And while yes, there are many home Bitcoin miners which can turn good profits mining Bitcoin, the mining game is changing very fast. It has become a big corporate game with mining farms worth millions and millions of dollars cutting sweetheart deals directly with the power producers to get the cheap rates, thus having a massive advantage over the regular guy. However, for regular cryptocurrency mining enthusiasts, GPU mining is still very attractive because your GPUs are likely to stay relevant for a much longer time. You can mine a wider range of cryptocurrencies as well. So if one of them becomes unprofitable, then we can just switch over to something that will give you more profits, unlike a Bitcoin mining machine, which can only mine Bitcoin. And when you mine a given altcoin, of course, you do not have to keep it or be wedded to it or whatever you can imagine. You can just take that straight to the market and sell it for Bitcoin. Easy peasy, guys. Okay guys, honestly this is just a short overview. I could easily do a review of each platform that I've mentioned here individually in a tutorial on how to stake every single cryptocurrency in existence or how to mine every single cryptocurrency in existence. But this is where you come in. Take some time. Check out some of the things that I mentioned here to spark your interest. Find a few of your own things that you might want to be doing some more research on. Find out what opportunities work for you personally. Maybe you'll want to go all in on Bitcoin mining, or maybe you'll want to actually have a nice little spread of passive income opportunities out there for you. I personally have multiple sources to diversify my risk. You could, for example, lend out your Bitcoin for a yearly percentage with BlockFi. Then every month, when you get your interest payment from BlockFi, which actually is paid out to you in Bitcoin, then you lend that out again, thus compounding your Bitcoin interest on a monthly basis. You could invest in a GPU mining rig to mine Ethereum Classic, for example, which you then sell to make more Bitcoin. Maybe you grab some nice value staking coins like Ontology, for example. You stake it, you sell the gas, you buy more Ontology, thus compounding your staking rewards. Or maybe you throw a few bucks into BitMax tokens to get a daily payout in USD. That would give you 4 income streams. And even if each one of those was only a few dollars a day, that would add up very, very quickly as you start to compound it over time. Compound interest is your friend, guys. Compound interest and time make millionaires, and then it makes billionaires after that. Start playing with the math and find out what works for you. And then you can actually be putting your money to work instead of working for your money. Anyway, guys, I hope this was super useful for you and sparked some interest in how you can get out there and start earning a passive income on your cryptocurrencies. I hope you learned something new in the video course as well. And if I missed something really big or interesting, let me know about it down below in the comment section, guys. Thank you so much for watching today's video. As always, you guys, totally freaking awesome. I love you all so much, so thank you so much. If you did enjoy today's video, hit that thumbs up button, guys. Make sure to subscribe to the channel if you are new around here. Long live the blockchain. And peace out till next time.